New inflation data completely flips the script for where we're expecting inflation to head. We were led to believe that the Trump tariff situation would lead to crippling inflation, spiking again, causing problems, delaying our inevitable rate cut. This data, which has just come in, completely changes that, and Jerome Powell may need to take decisive action. Let's get straight into the report of what just happened. You can see here, we are seeing Bitcoin moving slightly up on this news here, on this latest hourly candlestick. But what happened? First and foremost, we came in at 2.4% versus the 2.5% expected by the market. In other words, cooler than expected headline inflation here in May. If I jump on over to the month-over-month figure, that actually dropped from 0.2 to 0.1%. This is really, really impressive. Now, I do want to go back to a step, because what you'll hear from the bears is that, no, guys, you should be careful, right? Jerome Powell may use this as a reason to still be strict with us, because it's the first time we've gone up again since January, right? December to January was up to 3%. Then we've started this year pretty well, and then it's our first inflection point up. They may be worried that this could show that inflation is rearing its head again, and we need to be careful, right? Wait for the June figure, wait for the July figure. So that's what one camp is saying. The other camp is saying, hang on, you were telling us to be really, really worried, and this is a nothing burger. You've gone from 2.3 to 2.4, it's 0.1. What are you even worried about? And certain things in there are like shelter, and if you look at certain items, it's not that bad. If we then zoom into the month-over-month, this gives us another clue, right? Because the month-over-month tells you the run rate of inflation. So the previous reading was 0.2. So that month's reading had 0.2 inflation. If you annualize that, that's 2.4% inflation year over year. This is just coming at 0.1. May seem like a small change, but it's not. Annualize that, we are currently running at 1.2% annualized inflation, okay? So hopefully that makes sense to you. This is significant. This shows that it's not that hot. You'd expect this maybe to come in at 0.3 or 0.4 if we had something to worry about. Then let's jump into core inflation. Core inflation was expected to come in around that 2.9%. Guess what? Came in at 2.8. Same as the previous month, still significantly less than February and then what we saw in January as well, of course. So this has continued to remain quite, cool, to be honest, here on the core inflation rate. And then, of course, month-over-month core, same thing as I just described, 0.1%. That's 1.2% annualized here. So to all intents and purposes, this is what we call quite a core report. I mean, Nick T here, who's quite a famous journalist, has said the following: the flatness in the year-over-year measure headline edging up to 2.35% from 2.31%, and core to 2.79 from 2.78 overstates how mild this reading is. But again, look at this. Declines in car and apparel prices, which some forecasters had thought would show early tariff effects in May, led to a cooler than expected core CPI reading. Okay, so this is something we have to take into consideration. And you can see here, to all intents and purposes, markets are seeing this as a positive. Now, of course, here on Bitcoin, on this kind of shorter time frame, we're trying to just maintain a bit of an uptrend here. We're getting a nice bounce, which is good. But again, let's get out of this triangle, right? Let's get out of this structure here if we want the continuation up towards new all-time highs and to start really stretching its legs. Now, on the weekly chart, things are looking strong here on Bitcoin. I mean, if we take a look at this, the main important thing for me to point out to you was last week was a clear doji candle. If you've taken my TA course, ijazcrypto.com/TA, you will spot that doji candle a mile off. You will know that's a reversal pattern. It's a sign that the bears were exhausted last week. They were exhausted last week from pushing Bitcoin just down to 100,377, right? I mean, we just reheld that 100,000 here on Bitcoin. We've bounced strongly here in this candle. And this week, even though there's a lot more to go, there's 4 days left here, we could be heading for the highest weekly candle close we've seen on Bitcoin in all time. right? Again, our previous close on this candlestick was 109. We could be closing above that 110 plus here on Bitcoin if we continue the positivity into this week. Now, if we take a look at the dollar index just to see how it's responding here, let's put it down to the hourly. You can see it doesn't like that CPI reading in terms of, you know, there's no fear that they can fearmonger anymore. So you're seeing that fall to the downside, which shows that risk is rotating on. This is good news. Now, I also want to then jump on over over to the Fed rate monitor tool. Let's give this a live refresh because, of course, the news has just come out around the CPI. And you've got the market still not expecting an emergency rate cut, next month, right? Again, the inflation is not crazy. Jerome Powell needs to hit an iceberg for him to cut rates. So remember, we're kind of damned if we do, damned if we don't. If we get good data like the data we've just got, there's no reason for him to cut rates just yet, right? And I think that's where we're pretty much sitting. If you go into July, even in July, people are starting to change their bets. 85% of the market still don't think we're going to get, that cut even into July. September is where you start to see close to 50% of the market thinking we'll get our first rate cut. So that's something for us to watch here over time. So again, you can see the headline coming through, 2.4% in May, slower than anticipated. The Labor Department's CPI increased by 2.5% year over year. On a monthly basis, 0.1. We've spoken about that all already. We're quicker than investing.com. Great. Checking on the S&P, which is, of course, a nice thing to check in on. And again, hourly chart is looking strong here. Let's jump on over here to take a look at the pre-market. Looks pretty nice and green. Hopefully we get a good green day, right? We're starting to see some positivity. Trump says China will supply rare earths in a done deal. So we're getting good communication around this tariffs. And at the peak of the fear, this is what I spoke about, right? We made videos on this channel. We spoke about the fact that right now, we just want to remain calm, right? We want to remain calm because this is peak fear when everybody's really worried about the tariffs and really, panicking. I said on this channel that, look, they just strike a deal with China and this market's going to V-shape recover. It's just going to recover. And that's exactly what we've seen. If you manage to buy, in these kind of dips all the way down at lows of 74,000, congrats to you, because that is exactly what crypto investing is about. You done it the right way. You're up 48% on any DCAing you did on Bitcoin. And of course, if you were DCAing on altcoins, we're yet to see that just yet. But again, altcoin season, in my opinion, is around the corner. I know people are frustrated. I know they're annoyed. But all I can say to those that are waiting for, these altcoins to really wake up is that the more people forget about altcoins, the more people forget about an explosive crypto bull market, the more powerful it's going to be. So I know it's frustrating. I know it's annoying. But right now, all you need to do is DCA. DCA. Make sure you're happy with your portfolio. Make sure you've only got good, solid projects. You don't have useless projects. And then you need to be patient. Be patient. Wait for everybody to forget about crypto. Your barber's not talking about it. Uber driver's not talking about it. Nobody at work is talking about it. That is when you're going to get that explosive pop-off. Of course, continue to monitor that M2 money supply. We can see it, of course, inflecting here. But let's just get that nicer push up, right? This is the yearly chart. Let's see that M2 money supply start lifting. Of course, let's get the US start cutting rates towards the back end of this year as well. And things will start to get a lot more easier for risk on investments. More money will be flowing in the system. More money will be coming into Bitcoin, into crypto. We've got favorable governments, favorable announcements coming out every single day. It's a good place to be. And as long as you're patient and you don't get fudded out, you're not crazy leverage trading to get yourself wrecked, and then you fall out of love in crypto because of that, you're going to be okay. The majority of people who buy good projects and hold and are patient and buy on pullbacks and DCA, they're going to do well. Ignore the scaremongering for the person who wants to take a 50x leverage trade on some random altcoin with his whole life savings and then gets wrecked, right? Forget that guy. Forget that guy. Right? For the vast majority of people who have been sensible, who are even trading in a sensible manner and have the majority of their portfolio long-term investments and then some trading on the side, they're going to be just fine. They're not the ones going 100x aping on hyperliquid on some random altcoin, which their friend have told them about, or they found on Twitter even worse. So good CPI data. We're progressing. We're moving forward. Hopefully some of this fear, uncertainty, doubt around Trump's tariffs and how crazy is this inflation going to be will start to just calm down a little bit. And hopefully we can start moving on to greener pastures. If you enjoyed this video, smash up likes. Do not forget to subscribe if you actively want to trade with me. Check out the links in the description and I will see you in the next one.